Hi, welcome back to Academic Markets Insight. Good morning, everybody. We have a very special edition today. We are starting our new series called Floor Tales, and we are so excited that Dan Passarelli is going to join us today. I just so excited about this. So as with me as always is Dr. Russell Rhoads, who is going to introduce our very special guest for our first Floor Tales.
So,
The Rhoads.
so Dan and I, we share something. We're part of the alumni of instructors at the Options Institute, the CBOE's education division. I actually was the new Dan for a little while. Since you left the OI, you've done a great job, and it's a tough business. I acknowledge it's a tough business. I personally would not want to try to get out there completely independent, and that's why I'm at a university. But you do a great job as an educator for traders, mentor. You've done a great job as an author. I think you've had a couple of books. You got another one coming out in the near term. When is it coming out? It's in April, and I did see an advanced copy because I think something I wrote on the back of it.
Yes. Yeah, April 28th is the targeted due date. I hope we're sticking to that.
So, the idea behind this podcast series is really, there are fewer and fewer people that really, got started trading on the floor. I still visit CBO every once in a while, and I don't see very many new faces. I just see faces getting older. And everybody has kind of a path to trading. How did you end up on the trading floor? And honestly, was it intentional? Because I know some people that just kind of fell into it.
Well, it was intentional being on the trading floor, but not necessarily to be a trader. So I went to school in Chicago, and on my breaks between classes or whatever, I would walk to the exchange, and I would walk up to the visitors gallery. You were able to do that back then, general public. And, I would just kind of watch and wonder, starry-eyed, 19-year-old or whatever, and just thought it was really cool. And so then I graduated with a finance degree, and I'm like, hey, man, I could go and get some job selling insurance or something, or I can screw around now and just do something that I think would be cool and interesting. And so I knocked on every door of the Chicago Board of Trade building, said, hey, can I have a job of some sort? And I got one as a runner, making $9,000 a year.
Yeah, that's common back then.
Wait. For our number one fan, what is a runner?
Oh, yes. So a runner is basically a lackey. It's somebody who's like, here, bring this order to Bob, the broker in the pit. He wears the red jacket. Don't screw it up.
Okay.
And then you go and give it to Bob and hopefully not screw it up.
So you were putting a lot of what you learned in your finance degree to work when you started on the floor.
Oh, tons. Yes. Oh gosh. Yeah. Well, funny, like off story here. Options and futures was the class I took in the last semester of senior year. And, I don't know what it's like for other people, but the last semester of my senior year, actually quarter now that I think about it, I was not super into it. And I was going into the final with like a D. That was like my worst course. Because I didn't do anything. I barely showed up, but studied for it. I don't think I got a single answer wrong, and I ended up with a B or something in the class.
Off the final, we hate students like you.
You should. Do as I say, not as I do.
Right.
Exactly. So, once you got down there, I mean, what were there some things that surprised you about it, or anything, that?
Yeah. So, what was surprising is that, like, I don't know. I mean, I'm just some dopey kid from the suburbs, and I just figured, well, those guys in the pit who are making the trades, they're just a bunch of rich guys whose uncle or father or somebody gave them the seats, and it's just this thing. They're them, and I'm the lackey, and I hope to one day be an assistant to them. Uh, but but then I came to realize that in the options world, which is very capital intensive, it was hard for most single individuals to have enough money to trade, and so there were backers,
Mhm.
and they would back some lackey like me, kid from the suburbs. And I was like, huh, so like I could just figure out, like, learn the ropes and convince somebody I know the ropes, and they'll give me money. Really? Like I could be them?
Yeah.
Okay.
And was it easy for you to make that transition then from lackey to being able to actually execute some of those trades?
Uh, kind of, like there were some trading firms where they had formal training programs. Like I hung out with all these guys from like Swiss Bank and such. And we would like be big nerds and talk about like game theory and card counting and statistics
Mhm.
stuff, and quiz each other on stuff. But like they were in this program, they got moved up the ladder, but the company I was in wasn't really that way, which I didn't realize at first. I was like, hey, you think I can be a trader? And they're like, well, talk to me in a couple of months. Hey, can I be a trader? And I went through that a couple of times, and then finally it was just like, look, Dan, we just don't do that here. And that was after like 4 years of running and clerking. And I'm like, gosh, why didn't you tell me that in the first place? So yeah, so then I went and knocked on doors again, but this time I knew what doors to knock on. Found a packer.
Yeah. And
Okay.
talk about, I want you to talk about this individual because he is famous in Chicago trading.
Who?
Steve Fawcett.
Oh, yes, yes,
Yeah.
yes.
Goodness gracious. He's not with us anymore,
Yeah.
but he's an interesting fella to say the least.
Yeah, yeah. So okay, well, I mean, first like I'm kind of like a Beatles nerd a little bit, and anybody who knows their history, like they like contacted every record label in the world and finally got signed by, this jazz producer from, and which was just a weird like last ditch effort. And that's what happened to me. Like I got turned down, turned down, turned down, turned down, turned down, turned down. And then somebody finally said yes, and it was Steve Fawcett's company.
Yeah.
Yeah.
Wow.
And yeah, he was an interesting guy. He in addition to being a renowned trader, just super famous, he was famous for being an adventurer. Uh,
Yeah.
he had tons of records. Crazy.
Oh, really? I didn't
Really?
So yeah, he tried to fly around the world in a balloon a couple of times,
Oh my
and
goodness.
I think, and then he would also fly like a little prop plane out west and stuff. And he went out on a flight, and a year or two later, they found some of his clothes and his wallet. So
Yeah.
apparently, he had crashed in the middle of nowhere, and then some critters got hold of him.
So
Yeah.
what
So
I'm hearing is he had quite the appetite for risk.
exactly. So exactly, exactly.
So,
So
speaking of appetite for risk, Dan, were you ever on the floor when any major volatility moves happened?
Oh my gosh. Yeah, there were definitely a couple of days and situations, a handful. Notably, 9/11, I was on the floor on that day.
mhm.
So, wait. Please help me paint the mental picture for this. So, you were physically on the floor when the planes, and you were in Chicago, right? So, you're not in New York, but you're in Chicago. And so, you're seeing all of this happen because it's being televised for you. What did the floor do? How did they respond?
Oh man, yeah, it was weird, man. Well, I was driving to work that day, and I was running late, and I listened to the radio. And I hear, oh, a plane hit one of the World Trade Center towers. And I was like, man, that guy, what an idiot. Like, attention, like there's a big
Like, how does that
building.
happen?
And so like I get onto the trading floor and there's more. And I don't remember if it was when the second tower was hit. I think it's probably when the Pentagon was hit. I was like, uh-oh, no
Yeah.
coincidence. And just a couple of stock options went into rotation and opened. And so not everything was open. I don't think anything was open in my pit. And as soon as that happened, I'm like, high profile building. Nope, I'm out of here.
Yeah. So
And
then the trading ceased for the day at that point, right? If I'm recalling correctly.
yeah, it ceased
Okay.
for the day. And ceased for a week.
Yeah.
Didn't realize I was going to be off. And a few days in, my risk manager called me and he's like, hey, so you think you're going to be okay going into into the open? And I was like, yeah,
Who knows?
I
Yeah.
hope.
I'm gonna do my best.
yeah. And some of the companies didn't really matter too much in this regard, but like he's like, well, you've got a couple hundred short puts in Carnival Cruise Lines.
Ooh.
And I was like, they're far out of the money. Whoops.
For a while.
Yeah, until they're
Yeah. Didn't even think about it. That's not what. That's funny because I was talking last night in class about, if you hear about something happening at one company, you want to start thinking how it spreads out, and that's kind of a good example of that. If you've got the terrorist attack, well, travel across the board is probably going to get hurt. So don't look at the airlines, look at the hotels and look at the cruise lines.
Right.
So,
Right.
unfortunately for you. So, in addition to that one, so this is the fun stuff. There's a lot of downtime on the floor, and there's a lot of, and it's a male dominated area. And when you end up in a male dominated area with downtime, idiocy happens. Any funny idiocy stories from the floor,
oh God.
or just a good one that you can tell in front of the kids?
There are a couple. So all right. So this one, I was still a clerk back then. So there was another clerk, and like I said, we would stand around and we would just talk about nerd stuff or dumb stuff or whatever. And one of the clerks was talking to another one, and the guy's like, oh yeah, I could eat 10 Big Macs in an hour.
Oh, no.
And then it's like, hey, Frank, you hear what this guy said? He could eat 10 Big Macs in an hour. I'll bet you can. And so like by the end of the day, they were literally trading it in the bond options pit. Yeah.
A little group over here. Yeah.
Yeah.
So not only is it going to do it, but people are creating a secondary market for it.
Oh yeah.
Cool.
Slow days.
Yeah.
I don't know how else to put it. Slow days. So what was the outcome?
Well, actually, what was kind of interesting and cool about it was like it kind of like made it expanded my mind a little bit and how to think about trading and such, because like I just remember there's this guy, they call him the Mad Russian. He came into the pit and he's like, I'll sell 5,000 at 6. And I was like, sell 5,000 at 6. What does that mean? And I had to think about it. And so like, the quantity was dollars and the price was number of Big Macs.
That's a
That's
I didn't, I honestly, if somebody had said, you lost me when you said that.
Yeah, exactly.
So 5,000, so, but that kind of makes sense. So somebody was bidding $5,000 that they would get to at least 6, or, oh my goodness.
And it was a future, it wasn't binary. So like, if he only ate 4, he would make $10,000. If he ate all 10,
he was short. Yeah. $5,000 a point. Oh my God.
Right.
So you guys weren't betting like, I've got $4 in my wallet.
No.
I was.
You are, yeah. Oh.
So before we got started, we were chit-chatting a little bit, and you had mentioned something about the Ford cash spinoff. Could you elaborate a little bit more about that?
Yeah, this was one of the more interesting things that happened in my trading career. So, I started as runner, lackey, uh, worked my way up to a trader's assistant, and got backing. And at one point I ended up being like one of the big guys in my pit. And so when the broker would come in, I was like slinging it, okay, sure, I'll sell you 500, boom. And so there's this one week where a broker came in and he's like, hey, what is the market in the Ford whatever options? So we get the market, and he's like, okay, well, I'll sell 2,000. Okay, by like 200, 300, whatever my share was. An hour later, what's the market in there? And we wouldn't even get the offer out. He'd be, oh, sold. And it's like, okay.
That's worrisome.
Yeah. Yeah. And it keeps going on. And so I accumulated a position. I had $80,000 worth of Vega.
Wait. And for our number one fan, what is Vega?
Yes. So Vega, basically, I think of Vega as like the translator between implied volatility points and option prices.
Oh.
So if implied, I basically had a position where if implied volatility went up 1 point, I would make $80,000. If it went up 2 points, I'd make $160,000. So, it was a big position. I had thousands and thousands of contracts. So we started getting a little nervous. Now, backstory, at this time, Ford was a $46 company, but they were sitting on like just a ton of cash that they didn't know what to do with. So they decided to spin off $20 a share worth of cash. And it was this pretty complicated deal where you could opt to get cash and new shares of Ford, or some cash and some new shares of Ford, or $20 worth of new shares of Ford. So it's like, all right, fine. So the X date comes. And in situations like this, Ford opens at $26, $20 lower, and the shareholders get $20. So it's basically like the same amount of money. Nothing changes. The implied volatility went up like 2 or 3 points.
Oh.
And I'm like, baby.
Yeah. Didn't expect that.
Yeah. But I'm like, yeah, okay. Daddy's having
this is a good day.
We're going to the bar. And so the next day I come in and I look at my sheets. I'm like, there's like $500,000 that's not here. I have $500,000 less than I had yesterday. Should I have more money? What's happening here? So the lesson I learned is that there's no volatility on cash. And so basically people didn't really think about this when Ford had the cash, but when they spun off the cash, it's just there's less volatility in the options.
I mean, the stock value is only based on the business, not based on that asset anymore that doesn't move. I'm now thinking it through. That makes a lot of sense.
Yeah. So like, even though the implied volatility was higher, the options were worth less.
Sure. Wow. Yeah. That's an uncomfortable lesson.
Yeah.
You're like, I had a great day and now today, not so good.
Yeah. Those complex situations, we would get lots of questions about them at the Options Institute. And I would often encourage people to kind of avoid them.
Yeah.
because you don't have a history to work with on them. And most people that have an experience with something like, I had a similar experience with Microsoft when they did the $3 special dividend.
Mm.
There was a similar kind of change in the valuation of the options that wasn't anticipated, that we didn't anticipate. So I kind of knew where you were going with that one, but not 100%. Finishing up, because we do want to keep this at like 15 to 20 minutes or so. A big portion of the folks that are watching us are college students that we actually have. You know, if somebody wants to get involved in trading, what advice other than pay more attention in futures and options classes would you give them?
Yes. Well, I think back when I started and now it really just takes some tenacity.
Mm-hmm. Yeah.
There are some predefined paths, like if you want to be a doctor, like, you don't have to make any decisions. You just got to study and go through the process.
Right.
It's sometimes like that in trading, but sometimes not. And so I think it's just one of those things, like you have to chase your dream and have some tenacity. And when somebody tells you no, say, okay, fine, and ask the next guy and just, you know, work your way in there, get your foot in the door and push the door open.
Mm-hmm.
Yeah. Dan, I'd like to share with you you have a couple of books out, and I think your descriptions on particularly some of the ways you describe trading is phenomenal. And I use your gamma scalping in my classes, and I have the students as a supplemental reading your textbooks in there because I think it's so good. So thank you so much for being our first guest on Floor Tales. We can't thank you enough for this. We've thoroughly enjoyed having you on. I've learned a lot. Sounds like Dr. Rowe has learned a little bit about implied volatility and cash. I know our number one fan has gotten a lot out of this. So if you have, and we want to thank everybody who has participated and watched this video. And if you have liked this video, please hit like. My kids get a big kick out of it. And if you're not a subscriber, and I hope you are a subscriber, Dan, please hit subscribe. Thank you very much.
Thank you.